Yo, good morning, everybody. Hope everybody had a great weekend. Just want to get this Monday video out for us. The preview on the weekly game plan, sort of what I'm looking at. Bit of a watch list going on. I wanted to apologize in advance. I am so sick. I can't even breathe out of my left nostril. So if I sound like a boring bum today, I apologize. I can't control it. Um, with that being said, I want to hop into it so I don't have to talk as much. With the spy, what we're looking at was, we had that pretty nice sized gap up on Friday. Um, and, we were trying to test this high set last Friday. And, the momentum just kind of stalled out on us. The Bulls really didn't have anything going if we want to go back to that chart from Friday. It was just kind of stale. Gap ups are tough to play given the fact that any upside moves really going to require a lot of strength coming in. Typically because, like I say with gap ups, the overnight move is already, justifying what the Bulls initially wanted to do. So it's tough for them to get any more upside room out of it. Um, we did have a play here with a red to green move to the upside. We held our support too. That was our one play, but after that, it was just choppy, man. Um, Today we're gapping down on a few missed earnings. I know Caterpillar missed pretty big this morning, a big U.S. company. They're down 5% pre-market. Um, they lowered guidance, I believe, too. I'm not really sure how they're going to be affected by China. I didn't really look into the conference call. With that being said, though, we are gapping down in the SPY. We did break support. We were trading in a neutral range between our 264.80 and 264.45 support and resistance. 264.45 did break pre-market, and we are trending down. This MACD and EMAs are trying to reverse here as prices trying to push back into this level, but we did break. They did close below. We're going to see how this ends up. Usually when you're setting new lows pre-market, it's not going to be a very weak day. We'll have to see if support levels get bought up, if we even test support levels. Because of this gap, we do have a nice size upside gap to play. If this 264.80 range breaks, we have room into the 265s. Our next key resistance area is 265.45 on the upside. So that's, a decent amount of room to capitalize on an intraday move. It is Monday, so we should expect some sort of volume and volatility going on. That'll be an upside play for sure. Downside, we could look for this area 264.45 to reject on any upside move. We could also look for the pre-market highs to reject at 264.80. At that upside area, we potentially could go either way, long or short, depending on our indicators at the current time. But on the short side, we don't have much support until around if this 264 breaks, down to here at this choppy level from last Thursday at 263.25. We have some resistance here on the 30-minute. This is also daily resistance as well, so keep that in mind. I sent out our morning levels this morning. No, weekly levels this morning. My apologies. So you guys know to map these out, and they provide a very clear roadmap for intraday trading. With that being said, if that 263.20 is going to be our main downside target, that's roughly 80 cents to $1 per share, which is huge on options. With that being said, we always take it one candle at a time. Our 30-minute MACD is flat in a neutral, sort of downtrending trend. I don't like to trade when it's in a neutral trend. We do have our EMAs supporting a downside downtrend, so we'll keep that in mind. We'll just quickly look at our larger time frames. We do have that somewhat of a double top. The daily chart's going to be a mess because of all my SR lines. With that being said, we have to start breaking these EMAs. As you've seen here, the EMAs have held this uptrend. The MACD's sort of cooling off a little bit. We're not really seeing any downside momentum just yet. It's going to be interesting to play out. Like I said, that weekly, MACD is still bottoming out, still in a nice uptrend. Our EMAs are converging. We're going to have to get above last week's weekly high, and if that's the case, we will have an upside move to about the 270 area. That's something, that's our highest upside resistance. If that high gets taken out, I'm not really looking at it much today, given the fact that it's about 3 points away from us, where we're sitting right now. But it is something to keep in mind that if that 267 double top does break throughout this week, we do have room to the 260, 270 area. If that breaks two, then we have a lot of room upside on to the next, 275 resistance. So keep that in mind. I'm not sure how that's going to play out with the extended MACD. That balance was really on some low buying volume too as well. So we're going to have to take it one day at a time. As always, I do have two other stocks I want to look at on today's watch list for you guys. This is a nice chart pattern on Pfizer, symbol PFE. Definitely something to keep in mind, but I do want to warn you guys that they are putting out their earnings January 29th. So Tuesday, tomorrow, that can potentially be a catalyst for this to break down. We're testing here at 40-30 support. It was a double bottom. So far, if that initial low breaks, we don't have much support until about 39.45. So roughly $1 per share. This stock has some options to it as well. We'll have to see if that plays out. Even it is a cheaper stock, so you can afford to take on a position with common shares if you don't want to trade options. But if that support breaks, we have room down to these levels, which can provide us with a great return. The 37 range, even the 38.40. Definitely room to capitalize on some moves. Our MACD is just breaking down to the downside. Our EMAs are in a clear downtrend. We had some large selling pressure going on here. Just something to keep in mind. A nice technical play, technical setup. Something I do want to watch out for is the oversold MACD on the weekly. We do still have room, especially if we get a catalyst from a declining earnings report. We could test these levels, but it is something to keep in mind. The stock is breaking down, and you're going to want to keep that on the back burner for a swing trade. Another one I want to quickly go over and keep this video short is JP Morgan. This was on last week's watch list as well. We'll wait for this weekly to load. So I have the Fibonacci levels thrown up there. I'm pretty much going to be looking for this 102 Fibonacci level to break at the 38%. Down to a pullback to, you can essentially pull back to around 98, which is the next pullback level on the Fib at about 23.6%. So we did hold this level last week, 1, 2, 3, 4, 5 sessions. So if that level does break, we could see some momentum coming into the downside. This is something we're going to have to watch with the SPY. The JP Morgan and financials usually follow the SPY pretty well. So just keep this in mind. We do have a lot of room to capitalize on. The options for JPM are fairly cheap. Gives ourselves some great room to work with. Just keep this in mind on a swing trade. I'm watching it on the 30-minute and the daily. If we are testing our levels intraday, I'll probably be looking at the 5-minute to get a good entry. But if that level does break, we could see a retracement here. With that being said, that's what I'm looking at so far this week. Simple, organized, and ready to attack the markets. Thanks for watching, everybody. Let's kill it this week.